Hi everyone. So in this audit session, we will be discussing about other substantive audit procedures. We had discussed the two topics on this, and now today we will be discussing related parties, which is the further drill down of the topic for other substantive procedures. So let's see. So nature of the related party relationship and transactions. Many related party transactions are in the normal course of business. In such circumstances, they may carry no higher RMM of FS than the similar transactions with the unrelated parties. So generally, the transactions with our related parties are in the normal course of the business, and if they do not carry the higher RMM for the financial statement risk. So they are mostly at the arm's length transactions with the normal unrelated parties. However, the nature of the related party relationship and transaction may, in some circumstances, give rise to the higher RMM of the financial statement transactions with unrelated parties. Few of the examples are related parties may operate through the extensive and complex range of relationship and structures with corresponding increase in the complexity of the related party transactions. Information system may be ineffective at identifying or summarizing the transactions and outstanding balances between an entity and its related parties. Related party transaction may not be conducted under the normal market terms and conditions. Related party transactions may be motivated solely or in large measures to engage in the fraudulent financial reporting or conceal the misappropriation of the assets. So similarly, the transactions that may not be the indicative of the existence of the related party include borrowing or lending on the zero or low or high interest rates, or with the no scheduled terms for when or how the funds will be repaid, selling real estate at the price that differs significantly from the appraised value, exchanging property for the similar property in the non-monetary transactions. So these are the few of the examples only for the transactions that can happen with the related parties. Since the related parties are not independent of each other, financial reporting framework establishes a specific accounting and disclosure requirement for the related party relationship, transactions, and balances to enable the users of the FS to understand their nature and actual or potential effects on the financial statements. So, what are the responsibilities of auditor in this case? The auditor should perform audit procedures to identify, assess, and respond to the RMM arising from the entity's failure to appropriately account for or disclose the related party relationship, transactions, or balances. Also, owning to the inherent limitations of the audit, and unavoidable risk exists that some material misstatement in financial statement may not be detected even though the audit is properly planned and performed. So, in that context, the potential effects of the inherent limitations of the auditor to detect the material misstatement is greater because management may be unaware of the existence of the related party relationship, or related party relationship may present at a greater opportunity for the collusion, concealment, or manipulation by the management. These two may be the reasons. So, what are the objectives of the auditor in this case? To obtain the understanding of the related party relationship and transactions sufficient to be able to recognize the fraud risk factors and conclude based on the audit evidence obtained. So obtaining the sufficient appropriate audit evidence whether related party relationship and transactions has been appropriately identified or not should be disclosed in the financial statements. Uh, so further drill down in the audit procedures for the related party. So to begin with the risk assessment procedures of and related activities. So to understand the entity's related party relationship and the transactions, these include specific consideration of suspectability of the financial statement to the material misstatement due to fraud or error that could result from the entity's related party relationship and transactions. Inquire of the management and others within the entity regarding identity of the entity relationship, entity's related party, nature of the relationship, business purpose transactions, whether entity entered into, modified, or terminated any transaction with the related parties during the period. Inquiring the management and others within the entity, such as identify, account for, and disclose the related party transactions, authorize and approve the significant transactions. Also inquire for the related party transaction not authorized. Unless all the TCWs involved in management inquire regarding their understanding of the significant related party relationship and any concerns that they have. During the audit, remain alert when inspecting records, documents for the arrangements or other information that may indicate the existence of the related party relationship or transactions. Inquiring the management as to the significant transactions identified by the auditor which are outside the entity's normal course of the business. So few of the examples are complex equity transactions, transactions with the offshore entities, leasing of the premises, sales transactions at large discount or returns, transactions with the circular arrangements, transactions under the contracts whose terms had changed before expiration. So these are just the examples and not the conclusive list. For the control risk or RMM assessment associated with the related party transactions, determine any of those are significant risk or not. So recognizing the fraud risk factor from the related party transactions, few of the examples for the identifying the fraud risk factors are: related party has vetoed significant business decisions taken by the management, significant transactions are referred to the related party for the final approval, no debate among the management, no approval required for the transaction. So these are the few of the examples which may give rise to the fraud risk factors in the related party transactions. Now, further audit procedures for the related party are: evaluate whether the entity has properly identified related party relationship or transactions. So, beside assessing the process used by the entity, the auditor should test accuracy and completeness of the related party relationship transactions identified by the entity. To address the RMM associated with the entity's accounts with affiliates, trace the balances with the affiliated entities as of the concurrent dates, even if the fiscal year of the respective entities differ. If the auditor assesses the significant risk relating to the related party accounting disclosure, these below mentioned substantive procedures can be performed, like confirmation with the related parties, confirmation with the intermediaries, inspecting the evidence in the possessions, uh, referring the financial publication, trade journals, and the official documents. If the auditor assesses a significant fraud risk due to the presence of the related party with the dominant influence, the auditor may perform additional substantive procedures like inquiries of and discussion with the management and TCWG, inquiring the related party, inspecting the significant contracts with the related party, appropriate background research, reviewing the employees' whistleblowing reports, all these. Also, if the auditor identifies the related party relationship or transactions that management had not previously identified or disclosed to the auditor should promptly communicate the relevant information to the other members of the engagement teams, request management to identify all the transactions with newly identified related parties, inquire why internal control failed to identify, disclose such related parties, perform the substantive audit procedures such as inquiring, analyzing, or inspecting the terms and conditions. If auditor identifies a significant related party transaction outside the entity's normal course of the business, then auditor should read underlying contracts or agreements and evaluate the business purpose for the transactions, whether the terms of the transactions are consistent with the management explanations, and whether the transaction has been appropriately accounted and disclosed. Also, if the management asserts that financial statement related party transactions terms are equivalent to those in the arm length transactions, auditor should obtain sufficient appropriate audit evidence in that case. Also, auditor should evaluate whether the related party transactions have been appropriately accounted and disclosed, have the effect of the fair presentation in the financial statement. Regarding the communication with GCWG, regarding significant financing and issues arising during the audit in the connection with the entity's related party. Also, regarding the documentation, this includes the names of the identified related party and the nature of the relationship. So this was all about the audit procedures for the related parties. Let me know if you have any queries on this in the comment section. I'll see you in the next chapter. Bye bye.